and welcome to NDTV Profit. We're currently in the midst of a storm for the IT sector, some would say. But for good reason, this sector has been the sunrise sector for over 2 decades. Today, we are in conversation with the big boys, the CEO of LTIMindtree, talking to us about the road ahead for the company, for the industry, and what lies ahead. Well, we have with us none other than Debashis Chatterjee, more fondly known as DC. Thank you very much, DC, for joining us today on the show. DC, we are currently in the midst of a rather tough period for the IT sector. For good reason, this was called the sunrise sector for over 2 decades. It's the only sector that's done positive returns, even in terms of equity markets, for the last decade or so. But times are changing, situation's very different on ground, challenges persist, and it doesn't seem like we're bottoming out just yet. In the case of LTIMindtree, there are different moving parts, right? You've had a significant merger which made the headlines, now finally behind you, if I may say. What, according to you, were the highlights and what were the risks, the challenges when you're going out with those objectives of merging the 2 entities? Do you think you've navigated that and it's only forward-looking now?
So first of all, Samina, thank you for having me on your show. If you look at the unique proposition about these 2 companies coming together, I don't think there are too many situations where 2 companies of equal size, almost equal size, came together. And if you look at the integration that we did for erstwhile LTI and erstwhile Mindtree as LTIMindtree, I think it was done in a record time of 6 to 7 months. Yeah. Of course, there were challenges. The very fact that 2 companies of equal size, there are a lot of advantages, but there are a lot of challenges. You need to ensure that culturally these 2 companies integrate well. I was very keen to drive the culture track myself and driving right from the top. But overall, I would say the integration has gone extremely well. The clients, the partners, the employees at large, everybody is very excited about the merger because it offers a lot of opportunities. Yeah. If you look at the number of clients we have, as a merged entity, we have 700 plus clients. Yes. The unique thing about the merger is that only around a handful of 10 clients who are common customers. So which means that we have a huge cross-selling and upselling opportunities into the remaining clientele that we have. So overall, the merger is behind us, the integration is behind us, and we are all excited to see the opportunities that presents in the medium to long term.
Yeah, and DC, I'm going to take a cue from that because when you did the merger, you talked about exactly this. The primary objective was revenue growth, cross-selling, upselling, and the fact that there was such little overlap, the opportunities were so much more. Now, a few months out after the complete closure in that sense of the deal, deals are still not flowing through the way I guess you'd like. Do you think this is an industry phenomena because the timing of it may not be ideal, or do you think more work needs to be done as a merged entity to go out and acquire those big deals?
So let me address that in 2 ways. First of all, since you mentioned timing, I must also call out that when it was decided to bring these 2 entities together, the only consideration was that we will bring these 2 companies together when both the companies are doing well in their own rights. Yeah. And both performing very well. So when we brought erstwhile LTI and erstwhile Mindtree together, both the companies were doing extremely well from a profitable growth perspective. So we never tried to do time the market, let's put it that way.
Yeah, and nobody saw this coming.
Nobody saw this coming. So we were very happy to do the merger, get the integration out of the way and think of what we need to do. Now, the second thing which I want to highlight is you look at the kind of work that both the companies were doing through the pandemic. What pandemic did, it was a lot of discretionary spend that came on the table and all the IT companies latched onto it, that including LTIMindtree. And post the pandemic, when there was a bit of a slowdown, cautiousness in the marketplace, bulk of the work which was transformation kind of work, which is discretionary spend, that started slowing down. And instead of that, most of the work that we are talking about are cost takeout and efficiency. Now, this is a thing which we need to appreciate because both the companies where LTIMindtree per se is now changing from a stage of transformation to the cost takeout.
Efficiency.
Now, what happens with the cost efficiency deals? First of all, these are longer tenure deals, which means if you talk about efficiency, it has to be done over a period of 4 to 5 years. You cannot do it in 1 year. And when you invest in these kind of deals, it involves rebadging, it involves some transition. So the first year is always going to be challenging in terms of the revenues kicking in the way you want.
Yes.
But over a period of time, they kick in. So when you talk about the deals that we have signed in the last, say, 12 months, 9 out of 10 deals are all on the cost takeout. So which means that once these deals start ramping up in the way we want, it will definitely, it's more forward looking in terms of the revenues as well as the margin. But having said that, where is the challenge? The challenge is, in the macro, we never expected that the decision making will be so slow. When clients have taken a decision to award a project to us, when we start ramping up, the ramping up is also slow. So some of these factors are not helping anybody in terms of ramping up the deals the way we wanted.
And this is not company specific. It is an industry-wide phenomenon.
Well, I can definitely tell you that we are getting, we had our share of situations where the delayed decision making has impacted our growth. And yes, you can say that I'm sure others are also facing the same situation. But profile of revenues or profile of deals that we have, since they're mostly cost takeout now, shifting from a transformation play to a cost takeout play, we are going through that transition.
So, and help me understand this, right? In a more sort of ballpark, if I may, you've got operational efficiency, which is cost efficiency, and you've got transformational. Your strength as a company sits with transformational deals, right? And you said the chunk of the deals coming in are more cost efficient. What happens going ahead? Do you think transformation would come back and pick up? Because I'm assuming these are far more profitable in nature. If they are they more profitable?
Well, I think both are profitable.
So you're okay doing both in terms of profitability?
You have to do both. You can't do one. And again, I will just give you an anecdote. If you look at what happened in 2008 during the subprime, after 2008 financial crisis, nobody was talking about discretionary spend. But if you look at 2009, 2010, there were quite a few large deals which were announced, which are all cost takeout. Look at what happened in the pandemic. During the pandemic, nobody talked about cost.
No, it went back.
Everybody was talking about discretionary spend, migrating to the cloud, so on and so forth. So there are phases where people are more focused on discretionary spend, transformation. There are phases when people are focused on cost takeout. But there was an interesting phase after the pandemic, when things started slowing down. We had customers who were actually talking about, can you do both? Can you do cost takeout? Take the dollars out, which will help in terms of funding the in-flight transformation, because they started the transformation.
So if you're saving money, you reinvest it back into the business.
So there was a phase like that. So we were also benefited by that phase.
But and that's a sweet phase for a company like yourself.
But now it's again tilted back towards cost takeout. I'm sure transformation will come back at some point of time. But to the larger point that I wanted to make is, as a company, as an organization, your strength should be such, your capability should be such that you can do both.
So you've got to be a little nimble as well in that sense.
You have to be absolutely nimble, and if you cannot do both, you cannot survive.
You set out with fairly ambitious revenue targets as well. Just before the merger, you were at, what, $4 billion? I did read somewhere where you said you'd like to hit $5 billion by the end of FY25. Of course, we didn't anticipate the slowdown taking so much longer. You think you're getting close to that number? Because as it stands, it looks like it still could be a few quarters out.
No, I think we have already, in the last quarterly results, we have indicated that, our overall game plan that we have in terms of the long-term vision of the company, that is intact.
Okay, great.
For example, we are, as a company, the vision that has been laid out by my bosses, Mr. Naik and Mr. Subramaniam, it's very clear that we want to become a $10 billion enterprise at some point of time. That doesn't change. Now, $10 billion will not happen through only organic. There will be some inorganic as well, acquisitions as well. But it's a long-drawn plan. But if you lay down a plan, then you need to move towards that plan. What we called out in the last quarter is that we had some margin goals, etc. But we said we are going to pause it for some time, because it is not possible, the current scenario, to pursue that. It will be delayed by a few quarters. That we called out.
And I mean, your returns or your profitability is a function of the industry. So the industry is not growing. There's no way you're going to beat that by a margin, right?
Profitability is also a function of the top line that comes in. So if the top line is not coming the way we anticipate, then obviously we cannot push the profitability levers so much so that it impacts the growth.
Compromises on costs.
So we don't want to we want to have both. So for the time being, we can probably pause in terms of maintaining the profitability where we are. We can continue to get the growth back, and profitability will come back. But at an overall level, since you talked about a specific number, at an overall level, we still have an aspiration. We have not given a timeline, but we are putting all the engines and all the machinery in place to ensure that we can go to a $10 billion over a period of time. And the journey that we want to embark on, it should be a profitable growth journey.
I'll talk to you about the glide path to the 10 billion in a minute, but now you're part of the big boys club, right? I mean, you're the big guys in the IT pack. And I'm sure you're getting a sense of what's happening on a political front. The US is going into elections. Times like these, spending, decision-making is usually delayed. What are client conversations looking like right now? Are they committal? Are they avoiding conversations? Is it all still very... Because we hear some people say there are green shoots, but the reality is that's not reflecting in actual deal conversions.
Well, I would say that the client conversations are still going on the way they normally go on.
Yeah.
We are working on deals, especially cost takeout opportunities. They're going on. There are a couple of situations where it's a combination of cost takeout as well as transformation, as I said. But what we are witnessing in the market right now is definitely there is a decision making which is slowed. It is a slowdown in terms of decision making. Customers are very cautious. I mean, I'll give you an example. If you look at the financial services industry, it's an industry which depends on a lot of regulations. Now, some of the regulations means that you have to do a lot of discretionary spend to make sure you're compliant with respect to. Now, if you are talking about a scenario which is uncertain, where you're waiting for the next the election results
You're not
to be
going to
announced,
make any of those commitments.
you probably will anticipate some regulatory changes in some areas. So in that situation, why would a client try to spend a lot of money in discretionary at this point of time? They will rather hold back and wait.
Yeah.
So those are the kind of scenarios which we are witnessing. But when it comes to cost takeout, I mean, many clients have grown their business through a lot of M&A. And when there's a great opportunity of taking some cost out of the system, they're focusing on that. So clients also decide what to focus on at what point of time. When their businesses are growing, they may not be focusing too much on cost takeout. But right now,
so
it's a great opportunity.
Bring the house
consolidate, bring the house clean,
up.
which will help them simplify the structure, make the whole estate very simple. There's a lot of technical debt in all those estates. Why don't you take the technical debt out? So those are the kind of things where clients are interested.
So, when you have these conversations, DC, while we're all waiting for the outcome of the US election, would it be a fair assumption to make that it's only a matter of time that these conversations actually convert into real commitments, putting pen to paper?
Absolutely. I think it's just a matter of time.
So maybe 2 to 3 quarters out, I think that's a realistic expectation?
That could be potentially the way to look at.
That's a best case scenario, you think?
I don't think we can say that because we still have to wait. Yeah. But bottom line is that even if we are talking about some of the macro in the US, whether it's the interest rate or the elections, etc., but there are clients who are still working on GenAI, for example. They are doing a lot of pilots with us. A lot of use cases are being built around GenAI.
I'm so glad you bring this up because that's what I want to talk to you about, AI. We now hear it ever so often, right? I think that's the only conversation that happens in schools when children are learning robotics, or I think older people don't know, just figure out what this really means. What does AI mean for LTIMindtree? What is the sort of commitment, contribution you're making to this? And what will this mean for shareholders? So while it may improve, will it improve numbers? Will it help you bag bigger orders? Couple of years out, tell me, from a shareholder of LTIMindtree, why is this important for me?
Yeah. So as I said, these are the early days, but huge potential. And I always believe that if you're talking about a new thing, new area like a GenAI, you need to become the customer zero for GenAI within your organization as well. So which means that within LTIMindtree and the larger L&T, can I develop certain use cases which I can use for my own
improving my own company.
Like for example, we are doing a lot of application of. We have already implemented GenAI in terms of policy administration, which means that if you have HR policies across multiple geographies, earlier you will be kind of doing a lot of searches, a lot of comparisons and all these things. But if you can develop the LLMs in the right way, large language models in the right way, you can actually do that much faster.
And if this works for you as a client, then this is exactly what you go out and sell to other people.
So essentially right now, if a client comes to my organization for a GenAI demo, I actually give a demo of what we have done within the organization. Take a slightly larger picture. Look at L&T as a engineering and construction conglomerate. There is so much of knowledge sitting over there. why can't you create a LLM around engineering by leveraging the knowledge that sits in L&T? And why can't we build that and take it to the external clients around the world? So those are also some of the things that we are trying to do.
And this is again sector agnostic, like we said, right? Or vertical agnostic?
It will be, there will be a generic part which is sector agnostic, but there will be also specific sector-wise LLMs that we'll be building as we go.
And how should I say this, right? So while this will improve the company as a whole, because of course you are a case study and a client to LTIMindtree yourself, but when you go out and sell this in terms of objectives or in terms of numbers that you're putting out for yourself and your team, what contribution of AI-led business would you expect your top line to come from? And I'm not asking you 1 quarter or 2 quarters. Let's talk 5 years.
Yeah, so I will tell you, I have a slightly different way of looking at this problem. What we have to understand is that when you create a solution for a client, or try to solve a problem for a client, it's an end-to-end solution. It has got multiple building blocks, and you have to touch all the building blocks to solve the problem. GenAI will be sitting in 1 or 2 of those building blocks. But GenAI is not going to be the entire only building block. It cannot be just entirely through GenAI. So essentially, when you talk about what will be the revenues coming from GenAI, it's very difficult to call it out.
Would you say contract value would improve?
Well,
because you're adding that service?
Well, I think it depends on the specific situation. All that the contract value, it may come down also.
Because lesser
you may have to cannibalize your own revenues to kind of give the benefit back to the client. But if you are able to do that and client sees value, maybe more work will come your way.
It's a tightrope to walk, DC.
It's a tightrope to walk, and it's the same thing that happened when cloud came into play. When cloud came into play, a lot of people were concerned about what happens to the on-prem. And all the on-prem was moving to the cloud. So we had the same concern over there. I don't think the business has gone down. More cloud adoptions happened and the companies are thriving. So my view is that there will be always a change. A change is always the only constant. It's refreshing. But every organization will be required to develop different kind of skills and capabilities to tide over this. Because you need to train your people on various new skills. Prompt engineering. We did not know about what is prompt engineering, because if you are talking about leveraging GenAI, you need to use the right prompts to get the right results. So you have to have prompt engineers. Then you are talking about Copilot as a model, and you have the Copilot. And why are we calling it Copilot? Because Copilot is assisting me to take some decisions, and I have to also train
it's
that.
Not the pilot.
I am trying to train that model. So there will be model trainers as another
role. Are you
role.
making significant investments in GenAI?
We are making significant investment. We have already made a lot of investments in a platform.
Can you quantify that for me?
I don't think I can quantify that, but I can tell you that at this point of time, the best investment that we have done is a Canvas.ai platform that we have built. What it means is that we have got this platform where I can encourage my clients to work with me in terms of creating a specific use case, which could be on the revenue side or the efficiency side or the engineering side, any of these areas. And if I can do that, because clients will not have access to all the LLMs that's available. But I have this platform where I've made everything.
It's a little bit like a buffet, right?
It's buffet, and I have all the options available, so I can work with the clients and we can see what works and what does not work.
And that's happening? Are you seeing that convert into revenues and deals?
That's happening. That's what I meant to say, that some of the use cases have gone into production as well. But it's slow. I mean, on the...
So they turn revenue creative maybe a couple of months down the line, maybe a year down the line.
Yeah, because they're all waiting for the use cases to mature. Because I think it's you have to also understand there's a lot of data play over here. So when you talk about Gen AI, you have to also build the right LLMs for the clients, which takes time. But once you are convinced that it will work, it will also, the customer's business models will fundamentally change. The way they used to run their business model, they have to reimagine their business models. So it will be fairly disruptive.
That requires bravery as well.
Exactly. So essentially, clients also will not do that unless they're absolutely sure. But where we can help the clients is let them come on our platform, look at the options available, and then let them choose in terms of what could be ideal for them.
Also, just one last thing to wrap this conversation up for your shareholders, your retail shareholders, of course, not the very big significant ones. 2 to 3 years out, what is it one thing that you want to tell us that we should be watching out for, and why LTIMindtree is a force to reckon with at this stage?
Well, I think one of the most satisfying aspect of my journey in the last 4.5 years has been the phase where I could do consistent, profitable growth. And I would like to get back to that phase. And it may take a little time, but I'm sure we can do that, and that's the best thing that I can offer to
any shareholder.
Any shareholder.
Thank you very much, DC, for joining us today and talking to all our viewers and your shareholders, stakeholders about what's in store for LTIMindtree. Thank you.
Thank you so much. Thank you for having me here.
Thank you.